Hey, Think Realty, thanks so much for joining us today on the podcast. It's always my privilege to be the host. My name's Eddie Wilson, the founder of Think Realty, founded it in 2013 as a third generation real estate investor. Just wanted to bring information and content to the marketplace, things that I got to learn around a dinner table with my grandfather and my father. Just wanted to make sure it was common knowledge in the marketplace, and so that's why I built Think Realty it's 12 years ago now. So it's been an awesome journey, and we're super excited to bring you great content today. We've got a great guest, but before we get to the guest, let me say a quick thank you to our podcast sponsor. Our podcast sponsor is brought to you by Real Property Management. Working with the right property management company can put more money in your pocket, not less. Real Property Management provides a higher standard of property management to make sure you're maximizing the return on your investments. Experience the real difference with Real Property Management. Visit realpropertymgt.com. That's realpropertymgt.com. Our guest today is Jean Klinkhamer, and John is with us today and has Klink Loans, and based here out of the Phoenix area.
That's right.
And so if you don't mind, just by way of jumping in, tell us your story. How did you get involved? Is this something that you've been doing for a long time or just started? But tell us your story.
You bet. Thanks. Honored to be here. I love what you guys are doing. I'm excited about the conference starting tomorrow here in Phoenix. So looking forward to it.
Sure.
I'll get to be on a couple panels with you guys, and
that's great.
Looking forward to continuing your mission of educating people and real estate investors.
Sure.
So my background, I grew up in a real estate family. My parents were real estate agents, commercial for my dad, residential, and did some development. And but it wasn't really for me till later. I got a degree more in engineering, started consulting in business, worked for a nonprofit for a while. But what got me back into real estate was seeing the freedom that it was providing for some friends who were working in the nonprofit I was working.
Sure.
And they just had passive income and time to really invest themselves in their bigger life purposes and not be as tied to W-2 jobs. So that's really kind of what got me inspired. I jumped into fix and flipping, rentals, lease options. It was a fun time in the early 2000s, of course, with the big run.
Sure.
And then I got my butt absolutely whooped during the crash, like many in real estate. Learned some really powerful, important lessons that are burned into me because of the emotion of going through tough times like that and seeing cycles.
Sure.
And my parents had been through real estate cycles through the 70s, 80s in 2 different countries, and so had really seen a lot of market cycles. And for me, I heard one of your talks, Eddie, where you talked about, I think it was your grandfather who was a banker, and said at the closing statement, right, the banker is always making money.
Yeah.
Well, I noticed on my flips, lease options, rentals, everything I was doing, I'd borrow some hard money, and it was like, that hard money lender always made money.
Sure.
So they had equity. So, and then my dad had also given me this piece of advice because I was leveraging heavily myself, which is, of course, can be a helpful tool, but has danger and over leverage.
Right.
And I've kind of experienced both and found my sweet spot about how to use leverage well. But he would say, hey, Jean, I understand why you're using leverage. Totally get it. But the sooner you can be the lender and not the borrower, what a great place to be. And that was really the first time in my life I'd personally considered that. And so for the last 15 years, I've just converted to being a lender. And a group of investors I brought in, we formed a fund. Now it's an official fund, and we lend to investors, residential, commercial, multifamily, pretty much any kind of investment property in Arizona. And it has just been the most fun thing I've ever done, and kind of something I'm endlessly fascinated with and can't wait to keep doing.
That's great. So as you've been managing this fund and finding kind of your way, for you, first of all, when did you actually start lending? Did you start lending kind of after the crash? Or?
Yeah, after the crash.
Okay.
So I borrowed as a hard money flipper and learned how to leverage using other money. I would secure equity investors in second position behind my first position lender. But really it was 2012 when I started lending. So I'd kind of seen those different cycles, and from watching lenders had seen, how does lending work in different cycles, and what are the easy ones and the most difficult ones.
Yeah.
So 2012 is when we started lending.
Yeah. I found, so I also have the American Association of Private Lenders, so I'm involved in kind of like all these different things. I found that sometimes the most consistent money for investors is coming through the lending channel, so it's like you're kind of providing 2 services. You're providing the service to the borrower who needs the capital, but also I want to make sure if you're an investor that's looking for more passive, that you consider at least something like this, because you're putting their money to work. Typically, in the best, you're taking the same position as a bank, right?
Yeah.
And so you're taking the best position in any deal. You're limiting your amount of liability because you're only going to lend of so much of whether it's the ARV or LTV. And so you're going to create this situation where you have limited risk, So to actually invest money, so you're providing a service for the borrower, but also for the investor, that they can actually get involved and put their money to work.
And what I've found, Eddie, is that of everything I've done within real estate, equity positions, all the different things I've done, to be a first position lender, I'm sure most of your listeners understand, but for those who don't, that just means you're recorded in first position. You're the first person that gets paid when you're first position lender, no matter what happens. And you have the whole value of the property is collateral. That position, I've just found, is the best, safest, most peaceful, most joyful place to be in the real estate stack. And if we can hit double-digit returns, which we do for investors, now you've got that sweet spot that investors are looking for, right? How do I stay safe and protect my capital, but also get a good yield? And finding that middle spot is, I've just found that real estate lending is such a great place to be.
Sure. Now you lend primarily in Arizona, but can you will you take investor capital outside of Arizona?
Yeah, absolutely. We're restricted by the SEC as a private placement to only accredited investors. So high net worth, high income, but we can accept investors and have investors from all over the country. And then the loans that we make currently Arizona only. We're hoping to open another state maybe later this year, possibly Florida, because we've got some good relationships and deal flow there. But currently Arizona only.
Yeah. Most people don't know, but Arizona for private capital is actually one of the most restrictive states, so it's really tough to come in and because there's so much licensing requirements and stuff like that. But so it's actually harder to find a private money loan in Arizona than just about any other state. So actually having a presence here is a great opportunity.
Yeah, and we know the neighborhoods. I mean, I've done fix and flips in Arcadia and PV and Tempe and Chandler, so all over the valley. We know people call us up or give us a loan app, and we know immediately where to place it and how to move that. That really helps a borrower. When I was a borrower, I wanted a lender that understood the neighborhoods, the exits that we were talking about, and kind of knows that intuitively within their team.
Sure, yeah. What are the trends you're seeing in the marketplace today? I mean, things seem to be moving. It still seems like we're still in a little bit of a stagnant place, maybe not so much in Phoenix, I'm not sure, but nationwide it seems like there's almost like a feeling of like it's just holding, like it's just pent up, is that what you're seeing too?
It feels like a transition kind of time and a holding pattern. I mean, certainly last year before the election, there was a lot of breath holding, and the last few months since the election, no matter where people fall on the side of that, at least we know now more how things are going. But with interest rates being high, the reality is it's challenging. If you're a homeowner, it's challenging. If you're a renter, rents are high. And so we're in this interesting paradox where we don't have enough housing. That's truly true, and especially of Arizona. There aren't enough houses both to buy and to rent, but yet affordability is a challenge. And so that creates, and then you've got the homeowner block that has 3% mortgages, which is a large percent of homeowners out there. Well, they have no incentive, very little incentive, to sell and move around. So it feels a little stuck. But the good news is it's a fairly predictable market. Right now it's close to balanced overall for Phoenix, slightly to the buyers on the West Valley and more to the sellers on the East Valley. But either way, it's closer to balanced, it's fairly predictable. The transaction volume isn't super high, but there are transactions happening. And so whether it's fix and flip, rental, Airbnb, there's things that work and strategies. It's a little harder. You can't buy at a super deep discount and you can't sell super fast. It's just kind of more in the middle, which seems not that great, but when markets are predictable as an investor, I actually like that. When markets are super volatile, even if they're moving the direction we like as an investor, there should be a certain amount of discomfort we have with that, right? Whereas when they're predictable and we kind of know, hey, what's happening now is probably what's going to be happening in 3 months, 6 months. And we use an index here in Phoenix called the Cromford Index. I know Mike Delpreet has talked a lot about it. Super helpful to understand supply and demand. Gives us a 6-9 month leading indicator, and really things are fairly stable. Low volume, but fairly stable.
Which stability in this marketplace is nice because it's been volatile for so long.
Yes, Arizona has had at its highs and its lows kind of the extreme of volatility. So frankly, having lived and invested through both of those, I don't mind this. It feels a little vanilla or boring or slower, but as an investor, again, there are opportunities and it reduces some of those risks and gives you a little bit more predictability. So that's the upside of the market right now.
Do you have a prediction on where you believe the market's going in a year from now, where it's going in 2 years from now? Like, do you feel like we are at you said we're kind of in the middle, but is there opportunity for growth, or do you think because of a lack of supply, a lack of affordability, that this is just going to be rough days ahead?
Yeah. The thing I know about Arizona, I've been here 30 years now, is that we grow and we're growing. And whether it's boom time, flat time, or crashing time, people are still moving to Arizona. It's interesting. Even during the crash, when it was so painful, people were still moving to Arizona. Our weather's great, even though affordability is less than what it was when you compare it to a lot of major markets where people are coming from. We're still pretty affordable. We got a great lifestyle. We've got just a lot of things going for it. So the shortage of housing, which has been finally in the news for the last few years, because very often what media and your average consumer just looks at is the demand side, right? Just demand only. And when interest rates are high, well, values are going to crash. But that doesn't take into account the supply side, which has been so constrained. And the reality is that the only prediction really I can make with confidence is we don't have enough houses. And that's not changing anytime soon. Because the builders needed to be building. They got spanked, like many. And they should have built in 2011, 12, 13, 15, 18, 2020, last 2 years, and they haven't been. They're building so slowly. And I understand why. They can make a good profit and kind of constrain the supply. But the reality is we don't have enough houses to rent. We don't have enough houses. And that, in the development side, for listeners who know that, it's a long cycle. So will we get to an oversupply again someday? Oh, I'm sure we will. But is that in the next 6 months? Nope. Is it in the next year or two? I think highly unlikely. And so I think we've got a really good window where you go, supply is limited. And interest rates is probably one of the biggest constraining things that there is, but market's getting more used to that. And my first home mortgage was in the 8s. I'm sure a lot of people are like, when you really think back and you've had mortgages in the 6s, isn't really that bad. So it's just people getting used to it.
It's not horrible. It's just when you're used to, you're seeing 2s and 3s, it's just hard to deal with.
To what we've had, it's so painful.
Statistically speaking, NAR put out a statement, I think it was about 2 months ago, that said that they believe that we were about 3 million homes at a deficit. Like there's demand for 3 million homes. And I know all the way back to, I saw numbers as much as 7 million homes in like the COVID kind of period of time. But whether it's 7 or 3, it just shows that there's a massive deficit of housing being brought into the market. And then last year, I think the amount of housing permits pulled was like around 1 million. So it's like, even if you just literally continue down that path, you only have 1 million this year and 1 million last year. Well, that means that we're 3 million today. We'll be 5 million next year. It'll be 7 million. Like it's just, it's not a problem that's going away.
And it can't be solved overnight. And for those who've tried to build or develop, the amount of time and lead time and government permits, all that kind of stuff, hopefully that will loosen a little bit. I see optimistic signs, and that's going to help. But like you said, you just look at the raw numbers and go, if it's 3 or 4 and we got 1 million a year, we've got a few years yet still of undersupply. And so.
Lots of undersupply, and there's not a big plan to change it, and there's really no incentive to change it. Like you said, there's not enough headwinds, economic headwinds, or whether it's interest rates, or I think if interest rates were to drop significantly, the amount of houses being built by the big 3 or 4 builders would increase. Like because then they would have an expectation these houses are going to be purchased quickly. It's an interesting stat too, that not only are we 3 million homes underbuilt, but we only have about 3 months worth of supply on the market. And NAR also says that a healthy supply of real estate is about 6 months worth of supply. Well, we're half of what that supply should be.
It won't take much of a bump in demand. Right now, it doesn't feel super undersupplied. If you go buy a house, I've had friends buy houses, there's some houses to pick from. You don't feel it. But when it's that kind of balanced and there's not a big supply coming down the road, is it ain't going to take much, and all of a sudden we're going to feel that seller market and that panic if you're a buyer. And if you're the owner, investor, landlord, you're going to feel good about that again, because you're going to see the demand. The supply can't keep up with it. The other interesting thing we're experiencing in Arizona is with the natural disasters, like in California, the wildfires, it's displaced a lot of people and decreased people's comfort level with living there. We've always picked up a lot of people from California, but that's obviously been pretty accelerated lately. And so the luxury and higher end market of Arizona specifically has been an outlier. It's been incredible. Some of the things that have softened or changed in other price points. In luxury, it isn't. We're now getting 10, 20, $30 million homes, and $5 million homes trade like this, the month supply you were describing. And some of those high demand markets are really, really low for that type of house. Because again, a buyer's coming from California or somewhere else where prices are even higher. You can get a lot of nice house in Arizona for those kinds of numbers.
For the money, We're seeing the same thing in Florida where I live. Is it's like we get a lot of the flight from New York and New Jersey, so you get these very, very high-end buyers who $3 or $4 or $5 million price point on a house just doesn't even. That's totally fine for them. But if you come down to Florida, in a lot of places, $3 to $5 million, you get a lot of house for that amount of money. So very good. For all of our viewers, if they're interested in potentially investing in your fund or at least taking a look at it, or maybe if they're from Arizona, they'd like a partner to consider for borrowing, how can they get a hold of you?
Well, if anybody's coming out to the Think Realty conference, we'll be there. I'll be on a couple panels. We'll have a booth. But our main website for borrowers is klinkloans.com. That's with a K. Klink loans.com. So if you're a borrower in Arizona, if you're looking to do deals, we'd love to quote. You can give us a call, book an appointment, click a little link, fill out some info. We'll be happy to get some info to you there. If you're an investor, our klinkloansinvestors.com is our investor side. We're $50K minimum, and then we can do auto invest and various features and ways for people to scale that up. And we'd love to serve if you're looking for that kind of passive income. And people can compound it too. Our compounding yield's over 10% right now and very tax advantaged. So for those that's helpful to, we're able to serve that. Self-directed investors as well, people 1031 exchanging, things like that.
That's great. Highly recommend at least taking a look at this because I'm seeing a natural progression of real estate investors that have done very well over the past 10, 15 years that are just getting to a place of passive, they want a passive income. They want to look at opportunities to not have to work as hard. They've already flipped their 100 houses and just don't want to do it anymore. So highly recommend that they come and take a look at what you got.
Can I show you my shirt, Eddie?
Let's see it.
We just unveiled this, Make Real Estate Passive Again.
Make Real Estate Passive Again.
So that's kind of our bent is people who have been really active in real estate, they believe in it, but they go, wow, if I could do that with less stress, less brain drain and steps myself, debt funds are really a good option people should consider.
They're very good from a return perspective, but also being safe, which a lot of people are kind of in that phase of like, they don't need to be highly aggressive. What they need to do is to move into this place of maintenance in their investing career. They're moving towards retirement and they just need that consistent income. So. Very good. Thanks so much for being on the show today.
Thank you, Eddie.
Make sure you check out John and go to the website there. And I want to say one last thank you to our podcast sponsor, which is Real Property Management. Working with the right property management can put more money in your pocket, not less. Real Property Management provides a higher standard of property management to make sure you're maximizing the return on your investments. Experience the real difference with Real Property Management. Visit realpropertymgt.com, realpropertymgt.com. And then I want to make sure that I put this in front of you guys. In 2025, we have, again, the Real Estate Virtual Summit, and that's coming up on August 13th. You can unlock the secrets to skyrocketing wealth with the top real estate investment strategies in 2025 by being a part, and you can attend the 2025 Think Realty Virtual Real Estate Summit, and you can gain all kinds of insights from different types of investing, whether it's multifamily or single family or all the alternatives like self-storage, or we've also got a special guest that is planning to be there that's going to be talking about mobile home parks. It's going to be a great event. Last year was our first one, and we got so much involvement that we're coming back again. You can go to thinkrealty.com/virtual, and you can get your tickets there, and we look forward to seeing you in August. Have a great day. Thanks so much for being a part of the podcast today.